Welcome back to Market Fatafat on ET now, and as we know that US Fed has decided to cut the interest rates by 50 basis points, and on that, the Fed rate cut is not the only thing that matters, says Chief Economic Advisor V. Anant Nageshwaran. He also says that the rate cut was priced in and the stock markets are moving ahead of the Fed decision. Let's go across and listen into him.
The Fed rate cut is not the only thing that matters. We have geopolitical conflicts everywhere, and there is an all-important election that is coming up in the US in November. And in general, the global economy has been slowing. The trend growth has been coming down. The rate cut by the Federal Reserve was much awaited, but I mean, one can also discuss whether whether things should be that way, that the interest rate cut of 50 basis points should really be something that all of us should be hanging on to. So I think it will have different implications depending on how much of it's already been priced in. But I think much of it was priced in already.
Yes.
So in that sense, the interest rate curves have moved ahead of the Fed action.
Yeah.
The stock markets had moved ahead of the Fed action.
Well, then let's resume with all the stocks that are in focus today. Nazar Technologies is in focus today because, in fact, this stock was sitting at its 52-week high when we see some profit booking coming in on it, because the company said it would raise 900 crores via issue of preferential shares. This would be the largest fundraise, which will boost its growth trajectories. Now, the investors include SBI Innovative Opportunities Fund. There is Juno Menta, Finsol, Think India Opportunities Master Fund, Siddharth Santeti, and Mithun Sancheti amongst the others. But also, additionally, Nazara has acquired further 19.35% stake in Absolute Sport Private Limited, the parent company for Sportskeeda, for 145 crore rupees, and the payment was split between cash and stock, bringing Nazara's total ownership of the Absolute Sports to 91%. Now, on the back of this news flow, Nazara is in focus today, but we can see profit booking coming in on this stock, trading with cuts of 5.2%.
But indeed, we also spoke with the joint MD and CEO, Mr. Nitish Matesar, who is of Nazar Technologies, and he talks to us about the upcoming M&A opportunities. Let's go across and listen into him.
We have, a fairly strong team that's working on this. We have a very decentralized approach to M&A because we do it at Nazara level, but many of our subsidiaries that are generating their own cash also redeploy that cash into acquisitions. We don't have a specific count or target of acquisitions. We believe we are patient in terms of, trying to find businesses that really fit our framework of acquisition and only then act. In the last year, we had raised capital and we were, very patiently creating a deal pipeline where we looked at a lot of companies. And this year we got more into action mode where we are actually executing some of the companies we liked. So yeah, no specific target or numbers of companies that we're looking to acquire, but wherever we see a good opportunity, we will move fast.
All right, then moving on, let's shift focus to what Westlife Food is doing right now, because today JP Morgan has come out with a note on this one where they continue to maintain their overweight rating with a target price of 925 rupees. What they are highlighting is the value efforts helping the traffic, and the comps will follow. The chicken and coffee could be significant AUVs enhancers, and the dessert is another key lever to play. Now, the growth salience of the digital assets widens consumers' accessibility, and the stores to incrementally skew towards the south, smaller towns as well as drive-through stores. On the back of this news flow, this counter is in focus. As of now, the stock is almost trading flat.
All right, moving on to another stock that is in focus today. Gaurav, Garden Reach is what you picked out for us. An order win coming in for this company. Tell us, what does it look like?
Well, yes, GRAC is in focus, and the reason being now the company has bagged another order. Now this order is for the construction and delivery of additional 4 vessels for 7,500 DWT each. Now these multiple vessels are built for German company. Total order now stands for 8 multi-purpose vessels with this additional order. Now the contract is going to be completed in the next 33 months. When we talk about the contract size, this new contract has been added another $54 million to the value, and the total value of the contract has now reached approximately $108 million for 8 vessels. On the back of this, when we talk about the stock performance, it has not actually, it was up in trade today, but now it has given up some gains. Now the stock is under pressure, but definitely watching out on this counter on the back of the new order that the company has won.
Out for Garden Reach there, but another stock that is in focus today and down and out in trade is ONGC. It is on the back of a downgrade that's come in by HSBC that they are reduced, the counter, and the target price that has been set is 235 rupees per share. The falling oil exposure prices, company's future visibility on the projects, they find it hard to be bullish on oil. HSBC says the declining production rates, reduced guidance for the KG field, they are the key concerns for them, and the risk of unrelated capex is also one of the key concerns for the company. Now, the capex intensity is likely to increase, but weaker performance of subsidiaries is likely to impact the dividend as well. So, on the back of that, they have downgraded the stock ONGC, and on the back of that, we can see ONGC reeling under pressure with cuts of 2%.
Alright then, moving on, let's shift focus to what PNG is doing, because the management speaks very rarely to all these analysts, and from that we have the management commentary coming in from Srinivasan, who is the CFO of the company, and he's sounding really positive on the demand outlook. He's saying that the rural demand is expected to keep through, anticipated the short-term challenges are there and those are expected to persist, but they are market leaders in feminine care category with half of the market, and on that the market stands at around 3,400 crores, and they are expecting double-digit growth over the next three years. And onto the FMCG side of the business, they are highlighting that the FMCG volume growth is expected to be in the mid-digit for FY25. So positive commentary coming in from the PNG management. The stock is over 16,000 rupees, and as of now still holding on to itself in green.
Alright, moving on to PNG's India and Gillette held their analyst meet, and let's go across and listen to what the management had to say about the analyst meet. Let's go across and take a look.
We are the market leaders in the feminine care category with nearly half the market. 30 years ago, the category was about 34 crores, and today it stands at a whopping 3,400 crores, grown over 100 times. We expect double-digit growth to continue over the next 3 years for the category. The fast-moving consumer goods industry has witnessed about 4% volume growth recently and is expected to be in mid-single digits for this financial year.
Alright then, moving on, let's shift focus to BREE Solutions, one of the recently listed counters, and brokerage notes coming in on this one. And Gaurav, take us through which brokerage note is highlighting what.
There are two brokerage notes on this company. Now, BREE Solution, which is fairly known as its brand First Cry. Now, Morgan Stanley has now initiated on this company with overweight rating and a target price of 818 rupees. What they say is that BREE is actually well placed when we talk about capitalizing on India's growing childcare market through its brand First Cry. Apart from that, they also believe that there are multiple levers in terms of growth and profitability for the company, and they also see some option value through Global Bee's brand. Apart from that, they also say that despite strong share price performance that we have seen, the current valuations are actually supportive. Other than that, Bank of America also initiated with buy rating and a target price of 770 rupees, because they also believe that there are multiple levers for profitability to play out. And firstly, they also say that the First Cry is in niche vertical, and this can actually help the company to grow its presence not only in India but globally. On the back of this, when we talk about stock performance, it was up in trade almost by 3% in the days, the early in the day, but now it has given up some of the gains. It is still trading with a gain of around 0.2%. So definitely watching out on this counter on the back of brokerage note that have come today.
Alright, that was the last talk on Market Fatafat. With that, it's a wrap on this edition. Gaurav, Ashish, thank you so much for joining us. With that, it's a wrap on this edition of Market Fatafat. Shrishti and I will take your leave. Thank you so much for tuning in. But don't go anywhere, because closing trades is up next.